All right, right here, I'm going to talk about predicting dollar block. First of all, is predicting dollar block. It's something for multi-day runner only. And first of all, you want to confirm the initial cap. And initial market cap is very important. If you got it wrong, the dollar block can be completely different. So you want to use either Yahoo Finance, Finviz, either your brokerage to confirm that what's the float of the market cap and what's the initial market cap. Those are first thing you want to confirm. Then second, predicting dollar block can be only used on multi-day runner. Try not to use on bound short. Do not use it on gap up short. It does not work on the intraday basis. Right here, I'm going to talk about how to really predict them and also how to use them to avoid your FOMO. And here is the equation. So first one, I think I explained the dollar block amount to you guys. There is a specific number for that. So let's assume that the dollar block is 1.5 billion. The pre-market is 10 million. The price is at 10 right now. So you're using estimated volume, which will be 100 million. It's pre-market volume times 10, right? So 100 million times the 10 of the current price, plus the price fluctuating after the market open. So you're looking at 1 billion at least for the dollar estimate without resistance, plus some extra liquidities because of that price fluctuation. So that means today it's getting close to that 1.5, and that day is likely to reach the peak of the dollar block. Then on the next day, it's going to either follow with a gap down or it's going to break down today. As I said, that for multi-day runners, each day has to trade more volume than the previous day, right? And the minimum green day has to be 3 green days. So let's say you are running into the second green day or the third green day. Once you run into the third green day, you're looking at the volume, you're looking at what's the price. Then you will see, okay, well, today the stock is likely to reach its peak. So I better start borrowing shares and then look for the stock to gap down, or looking for the stock tends to lose its momentum or forming its consolidations. So this is where you know the stock is likely to reach its peak. But if it doesn't, let's say if the pre-market volume is only 5 million, so 5 million times 10, that's the volume estimate. So it will be 50 million times 10 of the stock price. That will be 500 million. So 500 million does not exceed 1.5 billion. And even though plus some extra liquidity, it still will not even get to 1 billion. So you know that today is unlikely to reach its dollar block, and today's is not going to reach its peak before the momentum shifts, so you don't have to trade on that day. And this is a great method for you to stay away from FOMO. All right, so let's go into the part 2, predicting the momentum shift. And as I said, that if the current stock does not meet the dollar block criteria for its own market cap, that means the stock is unlikely to shift its momentum. So as I explained, that let's assume that the pre-market volume times 10 equal 15 million. So 15 million times 15, that's $750 million block. And if the dollar block is at 1.5 billion, that means the current day total traded amount does not exceed the $1.5 billion block. That means today is unlikely to shift its momentum since it hasn't reached its peak yet. So that also means it's not efficient to short, and this is, you can avoid FOMO. You can just turn your platform off and stop trading that. And this method, as I said, last point, this method can only be used in the multi-day runner cases. Now, since you already know how to predict what day is going to drop, right here, we're going to predict what time is likely to drop. So first of all, that we know the pre-market volume times 10, that equals the entire day volume estimations. So how much volume is going to trade throughout the entire day as an estimate. You can use the first hour times 4, the second formula, to get more accurate volume prediction. And second, we want to know the dollar block for initial market cap for each market cap zone. So for market cap between 0 to 100 million, 100 million to 200 million, 200 million to 500 million, 500 million to 1 billion, and 1 billion or above. And for those, you already have your number. Number 3, we already know that if today is likely to reach its dollar block or not. If it doesn't, we avoid that day. If it does, we stay and we watch the ticker to form its consolidation. Number 4 is by observing the chart on that day, since we know that day is likely to reach its peak, we want to know what's the approximately time when the dollar block is likely to reach its peak. So there's going to be two methods that you already know what day is likely to drop and what time is likely to trade on the short side. So whenever you know that it's that day, the stock is likely to reach its peak. After its consolidations, after it's parabolic and starts to consolidate, you will kind of get, okay, well, this is how much volume I traded within an hour. So you traded 30 million shares within an hour and traded another 30 million shares within an hour. And you can look at them by hourly basis to see, okay, well, by the time of 3 p.m., we're likely to reach its dollar block since it's trading 30 million volume an hour. So from that point, you can kind of know, okay, this is time maybe I want to start placing my short positions. So it's not like exact time, but if you track them by hourly basis into a consolidations, you will know that by the end of the day, in approximately on an hourly basis for you to start getting your entry in.